Good day. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening. As we're sitting here now on Thursday, the 23rd of February, and we're playing games here around 6:50 in the evening. Now, before I get too far, this is the last day you can get to see the Walmart report that I put out. I cover in it in detail the weekly charts. I'm going to give you commentary, earnings. I'll talk about that. Then the daily charts. You're going to get price counts. I didn't do a seasonal chart. We'll knock out that on this because I don't do seasonals on the stock charts. There aren't seasonal factors other than Christmas and other things like that, which I guess there could be. I asked people if they knew of a seasonal service for them. Nobody responded, so I doubt that there is. But it's an interesting thought. But I think you'll like these reports. They're quick, they're to the point, they really give you long-term and short-term analysis, long-term trade ideas. Where do you go with it? It's free for most of you. After you've seen a few of my reports during the year, I should tell you that, we have a number. And after that, you either become a paid subscriber, you pay a small fee to see my reports. They're not going to stay free. They're free to get you so you understand what we're doing and how we do it. It's no different than when I put out my free research. You can go to our website under research. You can go up here, just move your clicker, an icon will appear. So let's take a look, if we could, together now at the chart action today. Tomorrow, you're going to have one last big report. It's the Fed's favorite, the PCE index, so it's going to give us an idea of the inflation the way that Mr. Powell likes to look at it. He has said it's one of his favorite indexes. Let's see what it does. Right now, you're bearish in the stock market. You're bearish in the metal markets. You're bullish in the dollar index if you understand embedded stochastics for the metals and for the dollar. And you're watching the swing plays, which are not embedded plays, in the stock indices. What bounced today in the stock indices is you went to the lower Bollinger Bands recently, and you got a lift off of it. That's all that's happening. Now, the battleground is, and you know it, the battleground is, are we going to have 2, 3, or more Fed hikes? 2, I think, are baked in at this point in time. The third is semi-baked in, not quite there. That would be the June one that the market's still working on. The length of time the Fed will stay up. Well, each report that comes out tells me, at least, that I can't imagine the Fed when they end. If it were June, I wouldn't be surprised if they watched 3 to 6 months of data before they'd even consider lowering anything. I'm going to repeat again. Mr. Powell does not want to be Mr. Volcker. He doesn't want to loosen and then see the inflation comes back and he's got to go right back to do it. Talking about Mr. Volcker we do? No, that is not the legacy he wants to leave. He wants to leave the opposite. He beat inflation and put it back in the bottle. Period. End of discussion. His term will be over. Whoever takes over, they don't want to say, well, had Mr. Powell done this? That isn't what's going to be. When I look at the S&P, as I told you, if the market wants to fall back, the support, if you go to a weekly chart, is 39.82. There were so many people talking a week ago, well, we're up at the 4,100 level, 4,200 is the next number. I had 4,281 if it went there. The market petered out. When we take a look at the daily chart, how bad did it peter out? Petered out pretty good. Because as you look at this, you've got a pattern of lower highs, lower lows. You're in a downtrend at this point in time. The markets come back with an outside day up today. Where did that come in? Right at and I think you can see this, right at the 200-day average. By the way, this arrow pointing down is because going into the close, it was down, and then it came back in the last half hour. I was watching it go in the last hour of trading, and I just didn't change those. It doesn't matter to me. Why? Because the battleground was the Bollinger Band to the 200-day average. I've said it to you over and over this week, and that was the first bounce. It is not the change of a trend. We have found a sticky spot on the chart where the market doesn't want to break from. It needs a bad piece of news to get through there. And even if it's real bad, then you're at the 100-day average. I think it's hard to break it real hard from here. Is that a reason to buy it? None at all. None at all. But as a market technician, I'm now saying, this could be where the market's got itself into a zone where it's got support. Oversold into the Bollinger Band 200-day average, I think it's a support area to cover shorts, not to buy. I want me to repeat it, to cover shorts, not to buy. In the NASDAQ, you went to the 200-day average. You found your support over the past 48 hours right there. When we come to the Dow, you went to the Bollinger Band much earlier. Finally, you got to the 100-day average. It's giving you a little support. If it collapses from there, then the 200's the big support. But again, would I ever tell a client, and you've been with me, many of you watch me all the time, you don't go long over Bollinger Bands or short under them. You let the market get back in the band, and then you decide whatever position you want. In the Russell, you made your run at the Bollinger Band, found your support, outside day up. So we had a lot of outside days up. Now, if you take out the lows of an outside day up, if you've taken my outside day course and you do it the next day, which would be Friday or Monday, it often leads to a break either to the closest Bollinger Band under that number or the moving average under it, the closest of it. If there's nothing, it's just a free fall market. In the T-bond, I've moved to the Junes. So what we have here is a market with lower highs, lower lows. The first real resistance spot's going to be here, the 100-day average. It's still embedded. It's trying to knock on the door saying, hey, I'm coming up a little bit. What should you do with that? Nothing until you see the PCE number. But if the PCE isn't bearish and doesn't get a bearish reaction to it, well, you're probably going to challenge the 127.4 area. And if you cleared it, then the 128.20. 128.20 would come into play only if you lose the embedded reading with the red line over 21. Remember that. In the 10-year note, same thing. In order to get up at the big resistance in the June contract, I've changed gears on you there. To get up into this whole area, the 113 area, what do you have to do? You probably have to lose the embedded reading. And if you lose it, you don't want to be a seller at that number. It's working off a very oversold condition. So this rally, there's another moving average that I teach in my enhanced Bollinger Band course under education at iraepstein.com. Go look at that. There's one more moving average, and that's what the pros will look at tomorrow, I think at 7:30. To me, if I were mentoring you, I'd go, you're not in the market, you haven't caught any of that? No. This isn't the spot you're putting on a new trade. Wait, see what that is, then let's talk and see what you do. In the dollar index, you have the embedded reading, which means the trend is locked in until the red line closes under 79. So you're backing off a little tonight. Makes sense. Some profit taking in front of the PCE, and then we'll see if the market wants to continue, which means the euro should be maybe under a little bit of pressure as it has the Bollinger Band down. So what's it doing? It's going to rally at first. If it's going to continue down, you're getting some short covering. So dollar profit taking, dropping it back, euro coming up in front of the PCE, but both are locked in with Bollinger Band trends that are very powerful until they're lost. In the British pound, you are just drifting sideways in an oversold condition. I don't know what to do when you're oversold. Truly don't know what to do. So I walk away from even trying to do anything. In Bitcoin and Ethereum, I think you're just whipping back and forth in the Bollinger Bands now. The money was made, past tense, and now the battleground's here and looking to see what happens. There's many there's many SEC cases coming against some of the crypto exchanges and people in it as the markets and the Fed, the SEC, is trying to sneak through a door to call these a security. Congress hasn't done so. There's organizations that will join cases to stop that. Don't know which way it'll go. Things seem to be getting uglier in the FTX case, by the way. Now they're finding more information against Mr. Bankman-Friedman. He's going away for a long time. He might be going with R. Kelly. In the Brent versus WTI crude, the market just keeps running to the upside, knocking on the door here, challenging the 602 area, if you'll notice. And as we came down, I said, I don't think the pros will press it to get through the lower band. So you're getting a little bit of a bounce here. Same thing in WTI, but these are bearish markets. I expect the pros to sell short at 77.22 on the WTI. They're wrong if you get up and over that number. They'll call it a day. and they'll wait and see what else can happen. If it falls, they'll look for the Bollinger Band. Too soon to think this market's going to go up. Russia is changing its tax laws so that the amount of discount they give on their energy as they're selling it abroad to find buyers, the producers of it only get so much of the tax break. They think that'll bring in nearly $7 billion back to their coffers. It still won't help. This war cost a fortune. In gasoline, I'm getting exactly the action I wanted. I wanted the market to not take out this low. I wanted it to find support against the Bollinger Band, and it's exactly what it's doing. It's too soon to be coming in, but you know I'm all over that market. Nat gas, were we not just talking last night? What were you saying? And I think we can come right here. Here's the market at the Bollinger Band, and it's suddenly coming back up. Now, I've switched gears. We had the March up. Today is the April, so I've left it. You had an embedded reading in March, but this will translate to it. And I said, gee, we're losing that embedded reading. If you do, you're probably going to the 18-day average. April's close enough, probably doing the same thing. Tell me that you're not. Bingo, right up to where I want it to be. What is the trend? This isn't trending as nicely as March was, but you can't be in March anymore. It's too late to be in that contract. So let the market do its thing. We'll have an opportunity or two. You have one to now go see my special report on Walmart. Just move your cursor up here. You'll see the icon, and away you go. I'll see you tomorrow morning. Have a good evening.